Hello again, everybody. Welcome back to Hot Desk, your quick tips and tricks on navigating the RealDesk platform. I'm Mark, your chief desk jockey. Today we're going to talk about expense payments and how to reconcile those deposits that come into your account when you recover expenses via credit card, e-transfer, check, and so on. Commonly misunderstood area, so I thought it would be good to do a quick demonstration on how this ideally should work in RealDesk and QuickBooks. It might be useful to just start by looking at how an expense works in both RealDesk and QuickBooks. In RealDesk, in the expense manager, when you set up an account, you will be asked to link it to a QuickBooks income account. And that's also another area where we've had a little bit of confusion in the past. It's called the expense manager because it represents an expense to the realtor. For the brokerage, it is income. In the case of something like business cards, or more commonly MLS fees or real estate board dues, it represents a reimbursement of something that the brokerage has most likely prepaid. As these reimbursements come in, you can put them into a QuickBooks income account like billable expense income to show those reimbursements that offset the expenses. That's the RealDesk side. In QuickBooks, an expense has two parts, the invoice and the corresponding payment. Remembering our double entry bookkeeping, where each entry has to have a debit and credit side. On the invoice, the credit side is that income account that you set up in the RealDesk expense manager. In this case, it's desk fee income, and the debit side is accounts receivable. On the corresponding payment, the credit side is accounts receivable, which cancels that out, and the debit side is an account called undeposited funds. And this is where, again, some can be a little bit of confusion. You might ask, why not use the general account as the deposit account? Because that is where the money is going to go anyway, right? And that's true. And in fact, for expenses that are recovered off of a deal payment, that is what we do. We automatically push them into the general account as part of the payment to brokerage transfer. However, there are other ways to recover an expense. One way is through our credit card interface, which can be done one at a time, or the overnight auto recovery. Another way is through manual recovery, which is a check or an e-transfer, noting the amount here, and then that gets sent to QuickBooks as well. These are the scenarios where we use undeposited funds instead of just depositing it to general, and it's really for two reasons. One is to provide a bit of a trail and a bit of assurance to make sure that that money does get deposited. The second reason is that if each of these expenses created an individual entry into your general account in QuickBooks, it would cause a lot of clutter. You can see here that there's quite a few expenses covered all at the same time. That would be very difficult to work through. If you imagine you had a few hundred realtors and you were recovering expenses almost every day, it would become very tedious to go through that general account when it comes to reconciliation time. Related to that, even though each of these is an individual transaction for $21, that is not how you will actually see the money come into your general account. If you get an e-transfer from an agent, they're probably paying off quite a few different expense invoices in one transfer. As well, with credit cards, you're typically going to be getting a deposit every day or every couple of days that is going to represent all of your credit card receipts for a given 1 or 2 day periods. Because we recovered all of these expenses on the same day, most likely we will get one bulk deposit from the credit card processor. So the easiest way to solve all of these problems and create that reconciliation process is through the use of the undeposited funds in QuickBooks. QuickBooks is an asset account, very similar to a bank account. It's for current assets, meant to represent funds that are in transit to a bank account. If we go into account history, we will see each of these $21 recoveries as its own entry. When we receive an e-transfer from an agent or a bulk deposit from the credit card company, we create a transfer from undeposited funds to the general account for the amount of that deposit. Let's say, just to keep this neat and tidy, that today we've received a deposit into our general account for $735. We would go to new transfer. We would transfer funds from undeposited funds to our general bank account for $735. We can create a memo, agent expenses, just to make it a little bit easier at reconciliation time. Hit save and close, and then you will see that the undeposited funds balance has now dropped down to 0. If I flip over to our general bank account, you'll see that the balance, of course, is increased by $735. It's really as simple as that. And by doing that, you should be able to always keep your undeposited funds balance close to zero. It might never actually get to completely zero, because if you're recovering credit card transactions almost every day, and typically there's about a 3 business day delay between when you process the card and when you receive the funds in your bank account, there will always be a couple of days worth that you haven't received yet. But typically your undeposited funds should be sitting at close to zero the majority of the time. There's just one final wrinkle here, and that is that credit card processors, of course, charge transaction fees on the amounts that you recover. Typically that's around 2.5%, depends a little bit on the individual card types. In a case like this, we would see most likely $15 to $20, and there's a couple of different ways that this can happen. Some processors will deposit that full amount, $735, and then later the same day or the next day, you'll see a separate charge from your general account for the amount of the fees, $15 or $20. That scenario is very easy to account for. All you need is your bank statement. You create the transfer from undeposited funds to general, and then you would create an expense for payment processing fees. Another scenario is that the processor will apply the fees and provide a net deposit. So instead of depositing $735, they might only deposit $720. In this case, you'd still be creating the same 2 entries. You still want to create the transfer from undeposited funds to general for $735. You don't want to be leaving a balance there, because that isn't a balance of funds that haven't been deposited yet. That's funds that have been collected, but with an offsetting expense. In that scenario, you would look at the billing that your processor has provided you, and they should have that mathematically spelled out, where they've recovered $735 worth of charges, and they've applied fees of $15 for a net deposit of $720. And you would create the exact same entries here, transfer from undeposited to general of $735, with a payment processing expense of $15, and you would have 2 entries in QuickBooks. The net of those 2 would be equal to the amount of the deposit that you receive. And that's how you can account for these expenses correctly and keep that undeposited funds balance at a level close to zero. If you have any questions, don't hesitate to reach out to our support team. Don't forget to like and subscribe on YouTube, and thanks as always for being part of the RealDesk community.